Most crypto traders lose money because they ignore risk management. In this video, I'll break down the top strategies used by professionals to protect their portfolios and survive volatility. Crypto markets are exciting, but without proper risk management, they can be devastating. Today, I'll reveal the biggest strategies to protect your investments, limit losses, and maximize gains, backed by real data. Stay until the end. Strategy number 7 is one most traders completely overlook. Volatility is high, 10 to 20% swings daily. Emotional decisions equals losses. Even the best trader lose money without proper risk control. Risk management is what separates successful crypto investors from the rest. Strategy number 1. Position sizing. Only risk a small percentage per trade, 1 or 2% of portfolio. Example, $100,000 portfolio equals max $200 per trade. But at the end of the day, you have to decide for yourself how much money you want to trade with. Limiting exposure ensures that one bad trade doesn't wipe out your gains. Always calculate risk before entering a position. Strategy number 2, diversification. Spread investments across multiple coins or projects. Avoid putting all funds into one volatile altcoin. Diversification reduces overall portfolio risk and protects against sudden crashes. Strategy number 3, stop loss orders. Set automatic sell levels to limit losses. Traders using stop loss reduces drawdowns by 30 to 50%. Stop loss orders are your safety net during unexpected drops. Strategy number 4, take profits in stages. Sell portions at different price targets. Reduces emotional decision making. Partial profit taking locks in gains while keeping some exposure for future upside. Strategy number 5, follow market cycles. Recognize bull, bear, and accumulation phases. Adjust risk accordingly. High risk moves during bear markets are dangerous. Conservative approaches preserve capital. Strategy number 6, leverage control. Avoid excessive leverage. Example, 2x or 3x max for risk management. High leverage magnifies gains, but losses can wipe your account fast. Keep it moderate. Strategy number 7, emotional and psychological control. Avoid FOMO and panic trading. Stick to predefined plans. Even with the best strategies, emotions destroy portfolios. Discipline is the ultimate risk management tool. So combine all 7 strategies. Example, diversified portfolio, staged profits, stop losses, moderate leverage, and emotional discipline. A consistent risk management plan is your edge in volatile crypto markets. Now you know the top strategies to manage risk in crypto. Protect your portfolio, stay disciplined, and trade smart. Subscribe for more crypto strategies backed by data, and comment below which risk management tactic do you use the most. Till then, see you in the next video.